Thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it's the final day of the week before the big day, Diwali. And remember, we'll be on Monday as well for a few trading hours, and then and for the Murat trading session, and Tuesday as well. So it's almost a normalized period for us as well. So just bear that in mind. First, global news flow for today. The 10-year Treasury yield has topped the 4.2% mark for the first time since 2008. US eyes expanding China tech ban to quantum computing and AI as well. This is fast turning into all gloves off kind of a battle. Elon Musk plans to cut Twitter's workforce by 75% as per Washington Post. Now, 75% is a large number. I wonder if tech companies will start getting into rationalization of workforces because there is stress there, as Snap's results have shown. And I'll come to that in a moment. Wonder what will happen then to the US consumer and then therefore to the world demand. Prem Vatsaba, of course, says that he sees opportunities in Greece and India. And if Prem Vatsaba is a value investor per se, if he's finding value in India, then that's a great thing. Select as it may be. Now, something that I'm trying to do today, because there are a bunch of global stocks which have moved, which might have an impact on some Indian names as well. Whirlpool Global earnings misestimates as the company cut the full year outlook as well. Could it have an impact back home? That is one. Snap plunged after missing estimates, and as a result of which Meta and Alphabet tumbled after the revenue missed expectations. Could it have an impact on the tech stocks out here? Though we don't have too many social media stocks per se, but you never know. It could have a collateral damage on some of the tech-first platform companies. So just bear that in mind. It may not really, but who knows? The other thing that could happen is that Liz Truss has resigned, and could the UK-dominated stocks, the JLRs, the Divvies, the Mastecs of the world, have a bit of a movement today? The market is a crazy beast. I really doubt something like that can happen, but who knows? Just bringing it to your notice. But more importantly, the US markets came off. The futures aren't trading at the brightest possible level, as a result of which we might have some bit of pressure on Asian markets. We do have, maybe Indian markets too. By the way, the 10-year yield is the big talking point in the US. It's about 4.2. We are looking at 3.8, 3.9, 3.99, 3.95, and then suddenly on a day spike to 4.15, and now 4.23. That is the US 10-year yield, the biggest culprit, if you will. The dollar index and the CBOE VIX are steady. It is the 10-year yield which has really jumped up. Has the SGX Nifty reacted too much, or is it kind of steady? Let's bring that one up now next on your screen to just show you what's happening there. Actually, not too much. And to be frank, I mean, even yesterday when the world markets are in a bit of a tizzy, Indian markets have outperformed. Is it the Diwali magic, or is it the local money magic? You tell me. Yeah, but today as well, the SGX Nifty is looking a lot steadier than what some of the Asian peers are looking like, maybe with reason. So what's the trade setup therefore? I frankly believe the index moves are unpredictable, but Indian markets are likely to outperform. The yield for the 10-year GSEC back home too, though, went up, rallied all the way to 7.5% intraday and ended at about 7.48. It'll be interesting to see what the yield as well as the rupee does today. Rupee was yesterday too at record close, and wonder what could happen there. Frankly, a few banks believe that it will tumble all the way to 85 very, very quickly. Let's see if that happens. What was surprising to me though was the corrective move in the strong banking results yesterday. IndusInd as well as AU Small Finance Bank, good numbers, but the stocks really corrected. I wonder, and dragged the bank Nifty lower compared to the Nifty, and it was a surprise. Maybe the stocks have rallied quite a bit and therefore sell the news, but didn't see any reason yesterday when we were doing the trade setup that a move like that can happen, but it did happen. Today we have a few strong BFSI names, the likes of Axis and Bajaj Finance, and I'll talk about them. But it'll be interesting to see what happens to those stocks as well. What I think though could happen is that sugar stocks would correct post key results. Consumption stocks are a bit of a mixed bag. Remember yesterday I said that after all the consumption names are out, we'll try and figure out if indeed there's a bit of a common thread to it. Couldn't find too much, but for the fact that consumption has not looked very weak. Asian Paints was a different case in point yesterday because the volume growth of 10% was not as strong as earlier, but it came on a very strong base of 34% volume growth in the corresponding quarter last year. So if last quarter was so good, it's very difficult to give a really strong quarter this time around as well, because the base effect comes into play. But the others, ITC, cigarette volumes, Tata Consumer, etc., they don't look all that weak. So consumption seems to be okay. Maybe a bit of a mixed bag. But sugar, certainly, Dhampur's results show that if that is a trend, then we are likely to see a bit of a corrective move in the sugar stocks and not the great performance from sugar companies as well. I think Q2 numbers from the Balrampurs and some of the others would be key as a consolidated entity to watch out for. Dhampur was bad. I think the stock will react negatively today. A bunch of results, by the way, today, some which come out post-market hours, the likes of Reliance, but HUL, HDFC Life, which will likely come out post-market hours. JSW Steel will come out post-market hours. Abuja, I don't know the timing. DLF would be interesting. SBI Life would be interesting. So we'll have a life insurance plays out of the way. Laurus Labs, Amber Enterprises, both of which are expected to come out with a good set of numbers. Can they surprise positively? Birla Soft in an otherwise iffy macro IT environment, can this outperform? Who knows? Let's wait and watch. So these will be watched out for. Let's talk about the stocks to watch today. Now, before I get to the long laundry list of companies that I am going to talk about, I want to make a mention about Emphasis. The results came out at 2:30 a.m. and the numbers are slightly below estimates on the revenue front. So maybe Emphasis might have a bit of a reaction. Profits are okay, but remember the stock is also corrected quite a bit already from its peak highs. But yes, the revenue growth number is not the strongest. Maybe it reacts. Now to the list that we have for you. ITC, let's start off with the big boy in the FMCG space. The revenue was below, but the EBITDA in line and PAT ahead of estimates. The net sales were up 24.4%, which was lower than the estimate sales in agri and hotels business, which resulted in this miss. Cigarette volume growth, though, exceeded estimates. 22% volume growth is better than most estimates, ranging between 18 to 20%. So that's a bit of a fillip. Remember, EBITDA did well for ITC ahead of estimates, and PAT up 36%, much ahead of estimates. So could this actually be a positive for ITC? I think most brokerages have said that yes, it is. Remember, the stock is trading at near 52-week highs. Now, Axis Capital's note on ITC kind of lays out what we would want to know, right? It's an ad. The target price has been raised to 375 from 335. Even Morgan Stanley's raised the target price to 374. And everybody's citing one factor, which is cigarette volumes. They've seen acceleration, 22% YOY growth, 5% on a 3-year CAGR versus 2.5% CAGR in Q2, which is a great thing. So cigarette volumes are a big surprise. The other key highlights, according to Axis, were the 20% plus revenue growth in FMCG business and sustained swing in profitability in hotels and as well as paper boards. They have raised the FY23-25 EPS by 4% to bake in the beat and the solid traction across businesses. This stock could see continued traction. It's no longer as big a heavyweight as it used to be. Remember, 10 years ago, viewers, some of you might not know, but ITC used to move the Nifty because of the weightage that it had. It no longer has that same kind of influence. It's a stock that retail loves to talk about. Maybe Insti too now. So it'll be interesting to see how ITC moves today. The other one, which is undoubtedly the leader of its craft, is Bajaj Finance. The numbers, NII 7,000 crores versus 5,337. Gross NPAs come off. Net NPAs come off. Net profit, substantial growth. You really couldn't find a fault with Bajaj Finance numbers. And you know, it's interesting what Morgan Stanley says when they talk about Bajaj Finance. They, of course, maintain the overweight. They've raised the target price to 8,900. But read the first line. Q2 felt like a boring repeat of the last 2 quarters. The point is, this kind of boring repeat is what investors love. Strong performance and very likely to get rewarded. Though after yesterday's IndusInd Bank and EU Small Finance Bank performance, I'm a bit wary of talking about what the likely reactions on stocks will be. But this one certainly seems to have put its best foot forward in Q2 as well. And no reason why it could not do well. ROA and ROE crept up further to new highs. The higher NIMs and the lower credit costs drove a 4% EPS beat. And the management commentary was strong, and they expect strong compounding for the stock going ahead. This is the Morgan Stanley view on Bajaj Finance. Let's see if the stock duly reacts. The other one is Axis. NII, 10,360 versus 7,900 crores. Gross NPAs at 2.5 versus 2.76% QOQ. So improvement on the gross NPA and the net NPA as well. I may not have the number here, but the net NPAs also did well. The net profit substantially higher, 5,330 versus 3,133. All through the last 3 months or 4 months, people have been talking about how banking will deliver good numbers. And boy, banking has delivered good numbers, which is great, by the way, for the overall index EPS as well. Keep that in mind. But Axis Bank itself doing very well. So Jefferies duly notes that and says that they have a buy and the target price has been raised to 1110 from 1010. They cite the strong NIM expansion and lower credit costs, which has lifted the ROA to 1.8%. The NIM expansion was also aided by better asset mix and repricing. They upgrade the estimates for FY23 itself by 14% and FY24 and 25 by 7%. They believe the valuation can re-rate as the gap with ICICI Bank is 35 to 40% now. For the longest time, people used to talk about ICICI not being able to bridge the valuation gap between itself and HDFC Bank and Kotak Bank. At some point of time, that gap started to bridge. Axis is doing well now. It's not a one-off quarter. I think, yes, there have been mixed performances, but largely they have done okay. So there's no reason why this argument of Jefferies that the valuation gap should re-rate, should narrow down, cannot happen. Watch out for Axis Bank today. Tata Consumer Products, revenues up 11%, margins 12.9%, almost steady there, net profit up 22%. Again, decent performance. Like I said, most consumer names seem to have done okay. This one is not a cheap stock though, so keep that in mind. SHRIRAM Transport Finance, NII up 18%, led by AUM growth of 11.2%. AUM growth in line with the new CV book, which showing positive quarter-on-quarter AUM growth, highest over the last 9 quarters, by the way. NIMs came in at about 7.59% versus 7.95%. The slight moderation is likely on account of lower yields and slightly higher cost of funds. And the lower provisions cause the PAT beat and the asset quality improves marginally. So neither here nor there, if you will, but more positives than negatives, one would have to say. Some other stocks in news include a PNB Housing, wherein Girish Kousgi is now has taken over. Sorry, it's PNB Housing, the PNG. But Girish Kousgi has taken over as the MD and CEO from October 21st. So watch out for PNB Housing. He's the erstwhile CEO of Canfin Homes. And did a great job in terms of attracting investor interest to Canfin. Can he do the same with PNB is the question. But mind you, the stock has risen in the last few days, so you've got to be careful about that. Harsha Engineers, the lock-in period for partial equity, which is about 3.8% equity, ends today. And could some of the shares come out to get sold? Who knows? The stock is trading higher than its listing prices, so there is a bit of an optimistic trend to it. It'll be interesting to see what this one does. The other one is Yes Bank, wherein Carlyle and Advent have gotten the India antitrust nod for Yes Bank's stake buy. This one should most certainly react in the session today. It probably was on expected lines, but you would argue that it will probably still do well. Some other key results include a Dixon Tech, wherein the PAT was ahead of estimates. 23% growth is ahead of estimates. Revenue up 38% too, very strong. So no complaints thereof. You will hear the management today at 1:30. KEI, revenue marginally higher, profitability was in line with estimates. And Nazara, wherein the esports segment drove strong revenue growth and a strong beat, but somehow margins moderated big time and the PAT therefore just came in line. A bit of a disappointment on the margin front, but the revenue numbers were very, very strong. So you never know. A bunch of analyst calls from Goldman, JP Morgan, etc. So Avenue Supermarts reinstated sell at Goldman. The price target is 3,600. This one doesn't quite fall normally. Pidilite has been rated a new sell at Goldman. Price target 2,250. And Titan has reinstated a buy at Goldman. Price target of 3,175 rupees. Asian Paints has been cut to neutral at JP Morgan. Price target of 3,365 rupees. So those are some key analyst calls that I thought were important to be highlighted. A bunch of conversations around Diwali. Of course, you will hear 3 eminent voices talk about what their portfolio strategy would be. This is the Alpha Mughals Diwali special. Sunil Singhania, Vikas Khemani, and Hiren Ved on the same platform talking about their portfolio strategy. This is a very interesting conversation. You may not want to miss this, coming up at 10. And of course, this is not all, a bunch of corporate conversations today. So Vijay Chandok at about 9:50. We'll do a short conversation with him, of course. Within Rakesh of Emphasis, which on the revenue front has disappointed a little bit. So that one at 10:30. By the way, ISEC 2, the numbers maybe beat estimates a little, but not the best of quarters. Sudhir Singh, CEO and Executive Director of Coforge, will talk at 11:30. That will be a very interesting conversation. Amit Singhal, MD and CEO of Asian Paints at 12. And Dr. Satyanarayan Chava, founder and CEO of Lotus Labs, talks at 3:30 once the numbers are out. So that's a power-packed lineup of corporate conversations as well that are slated to happen today on BQ Prime. We haven't mentioned Dixon. That will happen probably at 1:30. So that's the other one that you got to watch out for. But of course, some of you will hear me on these conversations, but for all of you, tune into Trade Setup every single day. And otherwise, from all of us at the BQ Prime family, a very happy Diwali, very prosperous New Year, Sal Mubarak, and may the good times continue for all of us.